Sound check. Sound check. Sound check. Got a new toy at the market. Anyways, this is today is the 18th of September. I come home on the 22nd. Just counting down the days, you know what I'm saying? Anyways, I've been pretty bearish in the market, even though we keep creating new all-time highs. But you can still make money shorting the market if you know what you're looking for. This is at the New York Open. Yeah. I'm not used to trading the Open usually. I'm up, so like when I'm up during the day, it's very early in the session, so usually I'm trading like London or the end of London or really early in the New York session. So I'm not really used to the volatility. It kind of like freaks me out when I see like these large candles. So I'm gonna force myself to like mostly just look and participate in the Open, because that's when I will be participating in it when I go back home. But I'm short here 2 contracts. You can see where my take profit is at right now. It's at the new day opening gap high. There's also some liquidity there, and what price is doing right now showed me that it wants to go lower. Because it makes the sell side imbalance, buy side inefficiency. So I didn't get the best, most like highest entry. I got pretty much like the second best entry you could have got on this trade. Try to keep the risk low, because I mean the risk is already high, like as is right now. Maybe a little too much. I might dial it back down to 1 contract during the New York session. But here we have some pretty strong movement straight to the Monday's high. As you can see, it kind of trades off that a little bit, uses that for some support. So there I take a partial off, just because that could potentially be a catalyst to send price a lot higher. And then this is like managing your risk here. It might have been a little too soon, but right now I'm okay with being too careful. And then, oh yeah, I remember now. I do intend to keep that same target, but I didn't really analyze earlier in the morning enough. So you'll see what I do here in a second. Right now it's just completely random, but I'll make it make sense in a second. If you look in the past, you find some PD arrays. That you can see prices reacting off those right now. Isn't that crazy? But yeah, just to make it a little bit more safer, a little bit quicker, I just put it to the low of that fair value gap. Because if my intended target is the high of the new day opening gap, well then like an easy, a low hanging fruit would be the bottom of that fair value gap. Which I do have a bad habit of doing. Like, I just need to let my trades pan out more. I keep on cutting myself short off some huge runs. Like I'm really right, but here's the problem. Like, if you're like, you gotta let yourself be right, and you gotta also accept when you're wrong. And I feel like I have a harder problem accepting that I'm right. Like, it's just weird. I don't know. Also, when I first started trading, it was during the Tariff War, and price action was like super fucking insane. Like it would go back and forth, like really violently. So I think I have like PTSD from that. Something I have to work through. You build like, not, I don't want to say battle scars, but like the negative experiences that you have the market in your past like affect how you trade in the future. So you got to continue to kind of like wipe the slate clean and just look at what price is doing and go with the get in sync with it. Not chasing price, but getting in sync with the overall daily bias. They know. Put the executions on just so you can see a little more detail. Nothing really impressive. I don't know. I'm still kind of just I'm wrapping up my studies now. Like before I start trading with real money, I'm kind of just solidifying the ideas that I use. Seeing it enough. See how it's like right around the 8:30 open. The manipulation going higher prior to that, and then it creates a setup right near the open. Get in around there. Aim for lower targets. As you can see, it's kind of like messing around in this PD array. Could be a potential. It's a good place to take a partial for sure. But I should have taken one partial off and left the contract on. That would have been the smarter move here. But it's all good. Okay. Switch back. Or going forward a couple minutes into the market. It does end up hitting my target and more. And yeah, it kind of sucks that like I didn't hold on to that, but it's just because I haven't done it enough times. I know it feels like I've probably made a bunch of these videos and I've done it a whole bunch, but I don't know, it takes more repetition than that. Imagine if it was that easy where someone could just study this and trade for 6 months and then make money like nothing, you know. Everyone would be rich. I've accepted it's going to take a lot longer than 6 months to get super good at this, but it brings me a lot of joy to see like the stuff that I'm learning, the stuff that I'm practicing actually works. That's the important thing here. Just keep on doing it. And I think like I don't want to be wrong, but that's just like a part of the game. Like I'm going to be wrong, but I'm also going to be right. So the trick is to let the trades, like when you're right, let it be right and let time do its thing and let money like flow instead of like cutting it short and fear of being wrong. And when you're wrong, you'll know you're wrong because it hits your stop loss, and then you just stop for the day. Then you look for, you know, a better setup later, the next day, or maybe a day after that, or maybe the next week. I don't know. There's only so many really good quality setups throughout the week, and if you're always trading every session all the time, trying to get every single capture of data, or trying to capture every single like slew of data, then it just makes it that much more hard when you can just wait for your setup. So you gotta imagine yourself as like a predator, like a predator in the jungle. You just want to eat. You know what I'm saying? You want to eat. Oh yeah, that was the first presented fair value gap. The first presented fair value gap holds a lot of influence on price action, especially if it lines up with your bias and your model. You know, like that's pretty much my model there, is waiting for a shift in market structure and getting in. So there was two shift in market structures. I got in on the second more like amplified one. And that's it. You can see the results. Could have captured a good amount of handles there. But yeah, it's pretty interesting. A lot of people are like really upset about the price action lately. Again, when I first started trading, it was like during the Tariff War, which is like probably the worst price action a lot of people have ever seen. So this is a little bit more manageable. kind of like a lot of more things are making some more sense now. Let me know if you guys have any questions or anything. It's about time I start putting some skin in the game, I think. There's no rush, but like there's a lot of potential. Like I'm missing out on a lot here by not putting actual money on the line. Yeah, that's it. I'm looking for another trade right now. See if we get one. It's Thursday after FOMC, so should be some life left in the market before Friday just takes a shit. But we'll see. I'm not gonna force anything. I've already made some pretty good trades this week. Alright, that's it. Peace out.